Hi, Randy here again. Today we're talking about a couple of different things. We're going to be going over the management agreement document and the rental pooling agreement. So first of all, on the management agreement, what we're asking for is an approval from the owners to continue negotiations with our RCR and bring them to a conclusion before September 30th of this year. There is in the agreements a transition period between June 24th and the end of September. But we're asking for an approval in concept that will allow us to go ahead and finish negotiations. That time period will also be used to perfect the efficiencies that we believe we found and to standardize our operations on a go forward. So starting October 1st of next year, we'll have a full year of operations under our new operating model. So some of the key terms that are in the management agreement are: number one, that it allows freehold owners. Number two, it improves the reporting. There's been some deficiencies in the reporting, so there will be period reporting and quarterly reporting that we'll ask RCR to give us. The idea specifically is that you can reconcile the numbers reported to the checks and expenses that you incur and the revenue that you receive. Contemplates a September 30th year end, contemplates the transition period between here and there, includes an assessment process that RCR will go around to each unit, and it will determine the quality of those units, of each of the units, and put it into an A, B, or C category. A will be the highest quality, higher rental pool. B will be the standard, and C will be units that can no longer be rented. We don't anticipate many A's or C's in the next year, but as we go forward, we're setting up that structure. The next piece is that there will be an a la carte cost, which we have now, but we now will review that at the board level with RCR annually. There's also the concept of standby rentals. This idea is that when the hotel is full and they can rent that incremental room, make more money for the hotel operations, and improve the income for the owners, that they can actually seek out owners that are not in the rental pool at that time to find out if they would like to rent their unit. If an owner is interested, RCR will rent the unit and have a transaction just between that owner and RCR. Because the expenses are more difficult and the expenses for RCR are a little bit higher because they have to check the unit and possibly clean it before and afterwards, we've agreed to a 60-40 split with RCR, where RCR gets 60% and the owner gets 40%. Now please note though that on these kind of rentals there should be a higher rate because they're the last units to sell. The next concept here is the rental pooling agreement. That's attached to the management agreement. It's basically the same as before. All of your procedures will be the same. The one thing is that we would like to tighten up the adherence to the rules. We've gotten a little slack over the last few years. We need to tighten that up to the benefit and fairness to all owners. The next piece is that we are introducing the concept of an A and B rental pool. And that is that when owners improve their units, add in an extra bells and whistles, make it a little bit better, that they can actually go into the A rental pool and benefit from the higher returns that it should be able to receive from the renting of the asset. The next part is that we are officially allowing a resort fee that would enable RCR to charge any renter resort access fee, which would be up to $10. That'll give them access into the lodge facility, the pool, the changing room, and what have you. This is in lieu of our amenities fees, which I'll explain in the next video. There's also the concept of having a revenue audit that we'll introduce from here and every year after. And we're also allowing the standby rental program. So that's a brief description of these two documents. Thank you very much.